Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. How you doing today? I'm going to do another video. This is just a quick one. We do this called FinTips. If you look on our channel, you can see the playlist is called FinTips. The idea being to be just short, quick tips that we can give you. You can be on your way and you've learned something new, and that's all good. We're financial advisors here at Jazz Wealth, so we like to teach, and one of the ways we do this is publicly here with you guys on the FinTips channel. I've got a really simple, quick one here for you today, but super important. I get this all the time. Did you know brokerage firms and financial advisors are not even required to ask you what we're going to talk about today? You're just supposed to know it. And if you don't know it, then it could potentially be a tax, a penalty that you have to pay, and you won't even know until down the road and the IRS checks in on you. So very simple one here today. Let's do it. Let's make it really simple for you, as we always do. We'll go to the blackboard. Your filing status determines your eligibility, right? For an IRA, for a Roth IRA. So if you're married, filing jointly. If you're filing single, if you're filing head of household, we'll just go head of household, right? Then you're eligible for a Roth IRA, traditional IRA, whatever it may be. You don't have to worry about this, right? So what you're going to do is you go, I'm married filing jointly, or I'm single, or I'm head of household. Then you're immediately going to just move on to the next step, which is check your modified adjusted gross income. In other words, it's your MAGI. Right? You're always going to see people saying MAGI. That's your modified adjusted gross income, and just to make it super simple, all this is your adjusted gross income, but you add back in things like student loan interest that you're not allowed to take out of that, so it raises it up a little bit. Anyways, married filing jointly, single, head of household, you're eligible for a Roth IRA. Now go check your modified adjusted gross income to make sure you don't make too much. So if you make too much, then you may not be able to contribute, or it might be some reduced amount that you want to contribute. What I want to talk about today are those people that are married filing separate. Right? Are you married filing separate? Why would somebody do this? Why would you be married but filing separately? Well, it could be divorce, in which case you likely don't live with the person, right? Or it could be personal reasons, right? I get a lot of people, I don't ask them why unless they want to share it with me, but it could be that you have student loan debt, or a spouse has student loan debt and you're wanting to use that for student loan forgiveness, or maybe you have prior alimony. You don't have to tell me, but you're in one of those camps if you're married filing separately. This becomes a big deal, right? So nobody's required to even ask you this. I ask it on all my phone calls there when people say, hey, can I open an IRA or a Roth IRA? Well, here we go. If you're married filing separately and you're divorced, here's the key. You cannot be living with the person all year long, right? So the year has to have gone by and you did not live with the person. You're still married filing separately, that's okay, as long as you didn't live with the person. If you live with the person, then stick with me. If you are married filing separate, but you're together, you're not like divorced or anything or separated, you guys are together, you're chosen for personal reasons to file separately, and you're living together. The key here is not living together, right? Versus actually living in the house at some point throughout the year, right? Anytime, at some point throughout the year. Pay close attention. This is where it gets tough here. So if you're married filing separately, you're divorced, not living with the spouse, and you make, or your MAGI is under $137,000 for 2019, you're good to go, right? You can go contribute to a Roth, traditional IRA, I'm talking about a Roth in this case, but you're good to go. You can go contribute to that IRA. No questions asked. Now, if you're close to the 137, there's a phase out. We'll do videos on that. There's one coming up tomorrow, I believe, where we talk about the phase out. So you may not be able to contribute the full $6,000, maybe it's something less. We'll show you how to figure that out. That's if you're married, filing separately, you're divorced, and you have not lived with the person your whole year. You with me still? Now, if you're married, filing separate, you're doing it because of personal reasons and you're living with this person. This is where people get stuck, because in this case, this is a whole different scenario. So if you're married, filing separately, we'll just do married, filing separately, right? You are living with this person, and you make $10,000, or your adjusted gross income, modified adjusted gross income, is over $10,000. You actually can't contribute at all to an IRA, right? You can't do it. So over $10,000, you're going to come back over here and say, nope, can't do it, right? If for some reason your income, you, the person watching this, your income or adjusted gross income is below $10,000, you can contribute to it, but not the full amount, right? You'd almost have to make nothing in order to contribute the full amount, and then you wouldn't be able to contribute the full amount because you can't, you don't have any earned income, right? So this is where it becomes troublesome. Married filing separately, you make over $10,000, you can't have it. Can't have an IRA. If you make under $10,000, you can contribute a reduced amount, but you got to be very careful about the reduced amount. You can't put the full $6,000 in there. You got to be very, very careful about that. We will cover that in a future video. I think it's coming out tomorrow, to be honest with you. So, really short video, simple one to go over, but all I really wanted to point out is if you're married filing separately, but you're still with this person. I've done videos on this in the past. I'm just going to beat it to death because it's super important. You pay penalties and taxes if you do contribute to an IRA when you're not allowed to. Please don't do it. Ask your advisor if you're working with them. Say, hey, I'm married filing separately. Does this count? I saw this random dude on YouTube. Does this count? And make sure you get it straight because otherwise they won't think to ask you and they're not actually required to ask you. So just want to give you that heads up. Hey, we'll see you later. It's the Closing Beat. We call it the Closing Beats, our stock market update show. We do it every day here at Jazz Wealth, and it's at 5 o'clock Eastern Time live on our YouTube channel. Hope you join us there. And thanks for watching. Hit the subscribe button, all that stuff that YouTubers say, and enjoy the rest of your day.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.